please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's get straight to the big story today, which is a significant development in the battle against bad debt. We told you last week, and it's official now. The Union Cabinet has given its nod to amend the Insolvency and Bankruptcy Code. The Cabinet has decided to tweak the law via an ordinance. Now, this ordinance will be promulgated after the President's assent. And as we have been reporting consistently, the amendments are expected to tighten the norms to prevent promoters of stressed asset firms from misusing the bankruptcy law. Announcing the Cabinet's decision today, Finance Minister Arun Jaitley said that the insolvency and bankruptcy proceedings, which were initiated a few months ago, are at an advanced stage and that the government wants to process the process to stay on the right track.
Some changes are proposed to the Insolvency and Bankruptcy Code. Since this is being done by an ordinance, till it is approved, as a matter of propriety, we don't give the details.
Why you brought in an ordinance? You called a session of Parliament. That's why you can explain to us that.
You see, it's at the whole process is at an advanced stage, and therefore you want the process to go on a correct track. That's the reason.
Okay, let's take this discussion further. As we have been reporting, the amendment to bankruptcy law is expected to make it tougher for promoters to get back their companies. However, banking sources in Mumbai tell us that banks are less worried about the promoter issue, but some want other practical glitches to be ironed out. The Indian Banks Association, for instance, has written to the Ministry of Corporate Affairs with some suggestions. Ritu and Lata have the lowdown on that. Ritu, what are lenders telling you?
Well, first up, the issue of promoters being allowed to bid or not allowed to bid is not part of the official, suggestions that the Indian Banking Association has sent to the Ministry of Corporate Affairs or the Insolvency and Bankruptcy Board of India. What they have, listed out is technical problems with the implementation of the IBC, where they've sought some changes. Number one, the issue of imposition of minimum alternate tax. Remember, if you take an example of a company which has a 50,000 crore debt and say 20,000 crore is written off, so on that remaining 30,000 crore, which is shown as profit on that on the stressed company's books, the new investor will have to pay about 30-35% tax, and that is something that is, the IBA seeks to remove to encourage more bidders to come forward. The second is, disclosure of liquidation value in the information memorandum, because that, the banker says, is depressing the bids. What it's doing is allowing the bidders to benchmark their bids to this liquidation value, which they say is fairly low. It's merely the scrap value of the company. Third, no preference, they say, should be given to government departments acting as suppliers, etc., to these stressed companies during the moratorium period, and they should be treated at par with the other corporate debtors who are also not, invoking guarantees in the same period. For instance, voting rights, they say, should also be given to creditors that have non-fund based exposures to the stressed companies, and they should also have some say in the COC. So these are some of the key highlights of the letter that was sent to the MCA and the IBBI just last evening. Of course, more details of what is going to be implemented will come through that ordinance.
Okay, fair enough, Ritu. Thanks for that. Lata, coming to you now. Put this into perspective. What exactly do the buyers really want?
Well, much of what, at least part of what Ritu said in terms of the tax on, the haircut that buyers are expecting to get when they buy a stressed asset, that is treated as profit, any haircut on the loan. So they don't want that to be taxed. And then there are other sundry problems, like, any loan is on a stamp paper agreement. So if the loan is in one country, one city, and the NCLT is in another city, then when you, even register the complaint in the NCLT, you have to pay a stamp duty. Imagine paying a duty on an asset on which you're making a loss. Creditors obviously, buyers obviously want that out of the way. Then, the way IRPs are allowed to function, they can only go into the premises of the company which is under NCLT, but often the core business is done in several subsidiaries and they have no right to enter the subsidiaries. So, they want these kinds of rights as well, in which case the subsidiaries also willy-nilly have to be taken to the NCLT. There are a whole lot of sundry, other issues that get kind of affected. For instance, the old SICA, the Sikh Companies Act, used to have a clause which said that when the authority, that is BIFR at that time, designed a scheme to rehabilitate a company, all other laws will be held in abeyance. Some such a law is not there in the IBC, that if the NCLT agrees to a rehabilitation program, other laws should not come in the way. That's what the buyers want. But the whole point is that this is not going to come in an ordinance. This has to be discussed, and that's why 3 days back that committee was appointed. The chances are all these are going to form the terms of reference of that committee which will go in. You don't need an ordinance to, amend the Income Tax Act on the MAT or to change the powers of the IRP. What is likely to be in the ordinance is whether the odds are going to be stacked against the promoters, and that was already there. On November 8th, the IBBI presented amendments to the regulations governing IBC, and that clearly said that the bankers, the committee of creditors, will have to check whether the man who buys the asset is capable of running it. So that is what I think is going to come in the bankruptcy code.
Yeah, Lata, let me just tell you, because this is information that our colleagues Sapna and Timsy are picking up on, and what we are given to understand is that in order to address the concerns urgently, it is proposed to promulgate the Insolvency and Bankruptcy Board Amendment Ordinance of 2017. So I'm telling you what the ordinance is likely to amend. Section 2, 5, 30, 35 and 240, and for the insertion of two new sections, 29A and D 235A. So the amendments that are being proposed are to section 2, 5, 30, 35 and 240, and for the insertion of two new sections, 29A and D 235A. We're trying to get more details on what the amendment to the Section 2 is, which covers basically personal guarantors, partnership firms, individuals, etc. But we'll try and get you more on that. But rather, if so that's the sum and substance of what is sought to be amended as part of the ordinance. Section 2, 5, 30, 35 and 240, and two new insertions.
Okay, Shireen,
In fact, another point that Timsy has just sent across is that, to strengthen the process of IBC, they will explicitly prohibit persons, those who've been declared willful defaulters or found guilty of having the history of siphoning money from submitting any resolution plan for the company. So that is one clear clarification that has come in. Also, as Lata ma'am was saying, as part of the November 8 amendments that the IBBI had made.
There are three categories which
but it's absolutely
everybody
clear.
agrees. Willful defaulter, as well as non-cooperative promoters and dubious promoters, as they're called, which is what you're calling siphoning of money. These three are expected to be banned in the ordinance. Shireen?
Yeah, so again, let me just read out what the ordinance says exactly. In view of the above, and in order to strengthen the process, it is proposed to explicitly prohibit persons, inter alia, those who have been declared willful defaulters or found prima facie guilty of doing so, who have a history of siphoning funds from a company or have been convicted for an offence related to fraud, misdemeanors or any breach of duty to any company from submitting a resolution plan, provide for eligibility requirements of a resolution applicant, and explicitly provide for the committee of creditors to consider the viability of the resolution plan and provide for further requirements to be specified by the IBBI in this regard. So it's absolutely clear that they are explicitly prohibiting persons, those who have been declared willful defaulters or found prima facie guilty of doing so, those who have a history of siphoning funds from a company or have been convicted for an offence related to a fraud, misdemeanors or any breach of duty to any company from submitting a resolution plan. Now, I think we've also got Sapna with us. Sapna, we're just going over the details that have come into us from sources from Timsy on what the amendments are as part of the ordinance to the bankruptcy code. Very quickly, you've been speaking with top government officials. What are you picking up?
Well, very clearly, as Timsy has rightly pointed out, and as we had also flagged off on Monday, November 20, there was never any, kind of a 100% prohibition that, promoters can't bid. Because what has been very clearly indicated is a tightening of the law, and all the parameters, all the benchmarks are already given on that account, that you don't have to have this background and that background. there was never any talk about, pushing them out of the picture completely, because top government officials have also indicated very clearly that had we done that, then basically the bid price for those assets may actually come down. And there's a high possibility that some of the promoters of these stressed assets, they have shown interest in among those 9 cases or the 12 cases which are undergoing right now. This is what government officials have told us very clearly. But a balancing act had to be done. So this is the way they have tightened the law, but there is no 100% bar. And the only other thing that has been raised as a huge caveat is the fact that the government did not want these promoters to come back and buy it cheap from the new owner. Because, where a 25 to 30% haircut may have to be taken, then the banks will end up taking a 50% haircut. So I think that loophole likely will be plugged now.
Yeah, so once again, for the benefit of our... we've also got Abhizar Divanji joining us. Abhizar, appreciate you joining us. Let me again, for the benefit of all of our viewers as well as your benefit, Abhizar, take you through what the ordinance is proposing. I'm reading this out, and this is, of course, as per sources. In view of the above, in order to strengthen the process, it is proposed to explicitly prohibit persons inter alia, those who have been declared willful defaulters or found prima facie guilty of doing so, who have a history of siphoning funds from a company or have been convicted for an offence related to fraud or any breach of duty to any company from submitting a resolution plan. So this very, very clearly is the big headline that's going to come in from the ordinance as and when it gets the presidential assent. We are given to understand that perhaps later this evening is when the ordinance will get the nod from the president. But this, Lata, is the big tightening, so to speak.
Yeah, I'll tell you something, Shireen. All the 11 promoters who are there in the IBC at the moment are not willful defaulters, have not been declared willful defaulters. A forensic audit has been done on them, and they have not been found guilty of siphoning funds. If it was, the banks would have taken criminal action against them. So while it is tightening, it has not yet stacked the odds against the 11 guys who are at the NCLT at the moment. That's the point which the bankers will want to know. If there is a difference in haircuts by these two parties, the promoter and an external buyer, and these promoters do not fall in the category of willful defaulters or have not shown any sign of fraud, then what is the obligation of the banker to deliberately take a larger haircut? So there is a grey area over there where the commercial banker has to exercise commercial judgment.
Okay, I think we do have Abhizar Divanji from EY with us. So, Abhizar, what we are given to understand is that as part of this ordinance, sections 2, 5, 30, 35 and 240 will be amended and 2 sections will be inserted. And the big headline there is that the ordinance proposes to explicitly prohibit willful defaulters, promoters with a history of siphoning of funds from submitting a bid, from entering this IBC process. So that is the big headline. It may not necessarily impact the companies that are already going through the NCLT process, but this is what the ordinance hopes to tighten.
No, I think that's a fair proposition. But you know what? The arguments that we've been having all the while, since the morning and for a couple of days, is that when the words willful defaulter and promoters have been taken synonymously to be the existing promoters. The point I'm trying to make is that anybody who has a history of a willful default will not be allowed to bid, promoter included. I think that's a fair point for the simple reason that banks will rely on the projections given by that person, and if that person stroke entity has had a history of a default, then obviously the banks would not want to take that risk. So that's the fair point. But the issue is what happens if somebody comes in who has a history of a willful default but wants to do a 100% settlement of cash? Is he in the similar category?
Right.
Second issue is if a promoter bids for his own company as a minority shareholder along with some financial investors who become majority shareholders, does that impact them from bidding?
Yeah.
I think these are very qualitative issues which will have to be taken on the ground when bankers meet.
In fact, Abhizar, Sure. Let me just read out to you now what we are given to understand. The insertion of a new section into the IBC code, section 29A, which says it will make a person ineligible to be a resolution applicant if he is an undischarged insolvent or has been declared a willful defaulter whose account is classified as a non-performing asset by the RBI for a period of 1 year or more, or who has indulged in preferential transactions, undervalued transactions or fraudulent transactions, or who has been disqualified to be a director in a company under the Companies Act of 2013. So what I am now reading out to you is the insertion of the new section. This is going to be section 29A. Abhisar, on the back of what I've just read out to you, what do you make of this?
No, so this is, one is that under the Insolvency Act, basically when you talk about all these sections which talks about preferential transactions, these go back 2 years. So the period of that is 2 years. The NPA period is 1 year, but doesn't, where you have been an NPA or a willful defaulter for 1 year, what it doesn't specify is how back do you go. So, it doesn't really say that whether only you look at a 2 year period, you've been NPA in the last 2 years, or have you ever been an NPA, and will that impact your situation?
As a non-performing asset by the RBI for a period of 1 year or more.
How back do you go?
That's what the new section is going to say. Yeah.
If you've been an NPA for 1 year, 10 years back, are you ineligible today? That's the issue that I'm talking about. So clearly one has to look at it, because I will tell you one more thing, Shireen, that we've had one very successful steel case in India, which was an NPA many years back. And that is the most successful turnaround case we've had in India anyway. So would those be ineligible today?
We've got Sandeep. Sure. We've also got Sandeep Parikh joining us. Let me, for the benefit of our viewers, go over some of the other insertions that are likely to be made. An amendment in subsection 4 of section 30 of the Act to explicitly provide that the Committee of Creditors to consider the viability of the resolution plan at the time of approval. Insertion of the proviso to clause F of section 35(1) of the Act to disallow the sale of property to a person who is disqualified to be a resolution applicant. Insertion of a new section 235A providing for punishment for contravention of the provisions where no specific penalty or punishment is provided. Consequential amendments in section 240 regarding the power to make regulations by RBI. Sandeep, a quick comment from you before I get Abhisar back in.
No, so on the bigger picture, I think what didn't come out in the morning is I think the nuancing has come as we see the text really. So I think it's a fair nuancing in terms of segregating failure from some kind of either crony capitalism or deliberate willful defaulter, etc. So I think this nuancing is pretty important, because I don't think failure needs to be punished, but if somebody's actually done mischief, handing over the company back to them is also does not make much sense. So I think this is not only good from that perspective, it also gives a kind of a run of the field in terms of how people should expect things to be in terms of the regulatory landscape.
Okay. Okay. Abhisar, a quick comment from you on the new section 235A as well as the amendment to subsection 4.
So I think, as Sandeep said earlier, I think where there has been a fraud or mispriance, I think it's fine. The fact that if you've been a 1 year NPA is what hurts me, because failure, as Sandeep again said, is not wrong. So if you've been an NPA for the wrong reasons because of a cyclical issue in the industry, I think that should be spared. So I think the focus should have been more on fraud and mispriance as against being an NPA.
Okay. Gentlemen, we will reconnect with you in just a few minutes from now. As we said that we're breaking this story here live on CNBC TV18, the details of the changes that the government is proposing to make by way of the ordinance that was cleared by the cabinet this morning, awaiting presidential assent. Presidential assent should come in today and the ordinance will be effective from tomorrow. We're giving you all the details, the fine print, the nuancing, the sections that will be amended and the new insertions that will come in. So stay on with us on CNBC TV18. We'll take a quick break, address that, and of course session for Parliament also likely to kickstart on the 15th of December, addressing that and more when we return. Welcome back. You're watching CNBC TV18. The big national story. We learned from government sources that the winter session of Parliament could start from the 15th of December and end on the 5th of January. Remember, the Congress, along with other opposition parties, have already sharpened the attack against the government for delaying the session of Parliament. Zafar Islam joins us now. Mr. Islam, thanks very much for joining us. Is it confirmed? Are we likely to see the winter session of Parliament kickstart on the 15th of December?
Well, there is no official confirmation, not that any official has so far spoken about it. It's just somebody has tweeted in the media, and that is something speculative at this point in time, unless it is being confirmed by the government authorities.
Okay, so you're saying that there is no decision yet on the date?
Well, I won't comment on this as of now, because the Honorable Finance Minister has very clearly stated that it will be a regular session. The date will get finalized and it will be intimated to everyone. So why unnecessarily speculate? And I heard that something, and I saw that somebody has tweeted in the media, or somebody has spoken to media, that it will start from 15th of December and it will end on 5th of January. But I cannot confirm that, because I haven't heard about it, nor that it is official, anything of this sort.
Nothing official. What is holding back the government from making it official, sir? We understand that there was a meeting even this morning along the time that the cabinet met to clear a whole bunch of issues, including the ordinance on amending the bankruptcy code. What is the government waiting for? What's holding back the decision?
I think nothing is holding it. It will be a regular session, and it is not for the first time it has been. Like dates have been
no, I know that, sir. I'm not getting into that. I'm merely asking why we were assuming that today we could have had a decision on the dates, but you're saying even today that hasn't been done. What's holding the decision back?
Nothing is holding, Shireen. It will get decided and it will be intimated to everyone. But what is more important for everyone, Shireen, today, it is for everyone to cheer, because the ordinance you were talking about, of course, the presidential assent has yet to come, but it is another giant leap towards ending the corruption, the corrupt practices, and against those who were siphoning money out of this country, and those who have been having free run during Congress regime. I think that era will definitely come to an end, because with this ordinance, once it is made public, once it kept into effect, definitely put an end to all the corrupt practices being followed by several promoters. I think today it is for all of us to joy, because the government is taking time and again decisive action against black money, against corruption, against and that is something which is important for the nation, for the people of this country.
Right. Sanjay Jha, let me come to you. We still don't have dates. It's still speculative whether it's going to be the 15th of December. But if it is going to be the 15th of December to the 5th of January, let's assume that that's the thinking at this point in time. Your comment?
Shireen, let me tell you that the very fact that the BJP spokesperson is calling the apparent news item as a speculative affair, I think that itself is a disturbing sign. I mean, one would have hoped that with the kind of massive public pressure and political pressure being put on the government on the importance of having a winter session of Parliament, I mean, the government of Mr. Modi needs to recognize that the Parliament is sacrosanct. The elections will come and go. And the purpose of Parliament is that various public representatives discuss critical issues. You know, I mean, he made some very motherhood and apple pie statements about corruption, etc. But Mr. Zafar Islam should know that the opposition wants to discuss about the very controversial Rafael scam deal. So there are issues here at this point. I mean, the economy still is in doldrums, despite a couple of headlines having events from time to time. And there are severe challenges. Now, the Gujarat election, everybody knew the dates a long time ago. Why has the government taken so long to even announce what would be the ultimate dates for the winter session? It just shows a lot of contempt for parliamentary protocol, which is unfortunate.
Okay. All right, Aditi Fadnis, it's still in the realm of speculation. What are you hearing from your sources? Is the 15th of December now the most likely date for the Parliament being reconvened?
Well, at any rate, whether it's 15th or 20th December, it is going to kind of clash, the whole session is going to kind of clash with festivities that MPs who are Christians, particularly from the Northeast, that their festivities will be held up, and frankly, Shireen, so will ours. because we will be busy on New Year's Eve with, frankly, a parliament session. What could be? I mean,
a good point. Yeah, you know who to blame for that.
But the issue is not that. I mean, the UPA can, Congress or whoever can adopt a very high self-righteous tone and say that these people are showing contempt for Parliament. I don't think that's the case at all. There is a genuine problem in what in Britain they call a calendrical problem.